Welcome to the Lunch Hour with Mr. Credit.
It's the big guy. Get in here.
And today, it's Wise Wednesday.
You're so wise, but like a miniature Buddha covered in hair.
Giving you the smartest financial advice in every aspect of your financial life.
You're so money you don't even know it.
And now, the Lunch Hour with Mr. Credit on ESPN Radio 1700.
Hey, it's your tomorrow.
Welcome. It's that time. It's your lunch hour. 1700 ESPN. Mr. Credit. It's JJ in the hot seat today. Yep, I'm back. It was Monday. It's Wednesday now. And I'm still here. They haven't kicked me out of the seat yet. But filling in for Mr. C and bringing you everything that hopefully will make you a little bit wiser on this Wednesday. Have a great panel in the studio today. Repeat offender. I don't know, it's been a long time, Vince.
I know, right?
It's been a long time. I don't know how long it's been, but it's been a long time since you've been coming in here. So appreciate having you in here. That's Vince Scuncio, and he is our real estate expert of the day. And Austin Bunn, is it Bunn?
Yes.
I should have asked you ahead of time because, you know, it could be Boone or something like that.
Yeah, you can go Boone if you want.
I can? Yeah. Throw people off out there? Yeah. Austin Bunn with Mission Home Mortgage and our mortgage expert in the studio today. Try to make you a little bit wiser. So let's do a quick market update. And things are green today. It's not on in the studio. I didn't change the channel, but it's been a bit of a green day. A little bit of sell-off on the bond markets today, not much, so I would call it pretty even when it comes to that side of the game. So I wouldn't worry too much about mortgage rates jumping too high, but you do have to watch out for them. If you're in escrow, if you're jumping into escrow, you're looking to make that move on a refinance or something like that. Don't wait for rates to go lower. I mean, that's the one advice I'm going to give you today. They've hit their low points of the year, and why would they go lower? There's no reason for it. We'll talk to Austin, get his opinion a little bit later. But pull the trigger, lock it in, and just be done with it. Just move on. There's no reason to keep waiting on that stuff. So, guys, I gotta talk to you about this. This morning I read in the Union Tribune, and I am a guy that still gets the paper. Walks out to the driveway in my underwear, pick up the paper. I do.
Thanks for the image there.
Yeah, you're welcome. I mean,
you're also the last guy with that. What's the phone you have?
Yeah, still carrying the BlackBerry. That's it all fits. It all fits. It was great. Somebody was on the show on Monday, and wonderful, wonderful lady. And it was great because she gave me a lot of heat from a BlackBerry. And
she tell you the 80s called and they want to come back down.
Far ahead of the curve than me, and it was funny. So I'm getting closer. I'm getting closer, but not quite yet. So the NFL, some of the NFL players, I think it's like 500 NFL players, and I don't know the exact statistics because I didn't bring the article in with me, but they're suing the NFL because they had been given over their playing history pain meds. And, medications, pain meds, other things to help block pain, obscure pain. And some people even say they were told misinformation to keep them on the playing field a little bit longer. And these pain meds weren't prescribed by doctors at the time. They were just kind of, hey, get back out there. Now, I'll get your opinion in a second. So this morning I worked out. I get up early, workout. And done with my workout, going to the bathroom, flip on the light, and something happened in my back. A nerve. I don't know what. It's a nerve of some sort. So I'm not going to be super mobile during this show, and it's one reason why I'm not wearing a coat, because I can't get a coat on. But there's nothing better than I would like for somebody to walk up to me right now and say, "Hey, man, I'll just give you a little injection right back there. You'll be all good for the rest of the day."
You gotta go about 10 miles north.
Yeah, that's true. Just give me something right now without that medicine. And I'm not certainly making the NFL type salary. So I got to ask you, I mean, for me, you go into professional sports and it's a benefit to me to have an injury, go off to the sideline for a minute, and somebody say, hey, you know what, let's just, let's go to the locker room, give you a quick injection, get you back on the field. You want to play, right? It's part of your deal. So I'm a little surprised that they're going after him. Vince, what do you think of this?
You don't hear a lot of active players. I don't think there's any active players in the lawsuit, right? They're all retired, so I don't know if in the lawsuit, or at least in the article, because I read it, but I read it online, that anyone was tied down, forced to do it, anything like that. Everyone kind of goes into it knowing what's going on. I mean, you're talking, there's probably more rules and regulations now, but you're talking some of these go back 20, 30 years. 20, 30 years ago, if you weren't getting it on the field, you could go out to the, that was back in the, 70s, late 60s, 70s-ish. Different culture back then.
Yeah.
So
you're playing with a broken arm.
You're playing that way, and that was the NFL. That's like the UFC now, right? I mean, those guys are beating the crap out of each other. Yeah, somewhere down the road, you're going to pay the price for it. No one's complaining now. So I think, in my personal opinion, was it right the way they did it? It was culturally accepted at the time. Now it's a different culture. They're feeling like, hey, we can go back and we can sue because we're beat up.
I mean, but that's part of the game. I mean, you gotta think, like, I'm playing football for a profession.
Yeah.
Right? I'm getting paid a lot of money. And even in those days, I mean, even if we go back 20, 30 years ago, they're still making money playing a game,
I guess my question would be, my question would be there's a doctor on each team, right? So if it's being prescribed and that doctor, not being officially prescribed as the suit claims, that doctor's got to have some involvement, or are these guys just throwing their hands up saying, I didn't know anything about this?
Yeah, I think it's one of those things, throwing the hands up going, well, I didn't really know what I was being given.
Right.
And I agree, Austin. I mean, I agree. It's like you have, some of these teams probably have some of the best, that are on the field, in the locker room, taking care of these guys. So it's just, it's a shame to see that. It is what it is. I'm not saying I'm for it, I'm against it. It's just interesting to me that you play the sport, and to me it's a benefit. And to go back and sue, you are getting some sort of pension depending on your time in the league. And Vince, maybe you're right. Maybe some of these guys, maybe they're not getting the pension. Maybe they're not getting the pension they think they deserve, and that's possible. So here's another one. I don't know if you guys saw this, but we're kind of out of a financial catastrophe a little bit. But in London, a J.P. Morgan employee jumped to their death from the building. It reminds me of times where things were going bad. Made a bad trade, lost some people some money, and you open the window and you take a plunge. It's sad to see. But if you read this, if you saw this or heard the news, this person was probably a little troubled internally, and it wasn't for doing bad things or losing people money. They're just troubled. So that's why they jump from the window. So here's another one, guys. Eggs. You guys eat eggs?
Yes.
You both eat eggs? Okay. I love eggs. I've always been a big egg person. I think it's a good source of protein. And, it's an interesting one, but I don't know if you saw this, but there's a company out there, Hampton Creek Foods, that is trying to create the non-egg egg. Okay. So now, statistically speaking, we have being produced, or laid, I should say, from chickens, over 1 trillion eggs annually, which is a crazy number when you think about it. It's a lot of eggs. And I'm assuming that I guess it's a pretty cheap source of food. When you think about it, you get a dozen eggs for a couple bucks. If you get the free range or whatever, $3, $4, $5 a dozen. But this company is saying, hey, it's a very inefficient way to feed people, because you have all this grain that obviously has to feed the chickens, which is creating this waste, which we get the eggs from, and you could see this, how it runs down. So this company created an egg-free mayonnaise, and I think mayonnaise is like eggs and oil. Have you ever seen? I remember some infomercial, and I think they threw like an egg in and some oil and the thing, and you get mayonnaise. It's kind of disgusting when you think about it that way, but they've created the egg-free mayonnaise, and they're trying to create eggs, good tasting eggs, And eggs that you can scramble, eggs that you can use in, it's obviously an egg replacement that you can use in cooking to make cookies and things like that, out of different plant material. So I got to ask, I mean, for me, I just give me the egg. I mean, and I have little kids, I want to see
that's one of the things they eat.
Yeah, they eat eggs, you know? Yeah, my kids love eggs. And, I just can't see stirring up some plant material. Now, obviously, I'm not going to know that it's plant material when I'm cooking it up. But, Austin, what do you think? I mean, do you think, like, from a scientific perspective here, we need to continue to run down this path, thinking of the future? And I mean, because that's what this company is saying. Like, hey, you know what? We're using our resources to get these eggs from the chickens.
Well, I can tell you one of the things that bothers me most in life is when I get a hard-boiled egg and it doesn't peel properly. So if that's worked into the equation and I get a clean peel on that egg, I guess
you're cool with it?
I don't know.
You haven't said anything about making the shell.
Right.
Just
See,
egg.
We're not. You're not getting a hard-boiled egg.
Maybe we
here.
don't even need a shell, right? I don't. Plant-based stuff. I eat it. I'm not seeking it out to eat that type of stuff, but the stuff I've had, some of it's good, some of it's bad. Whether it's I'm totally focused on my health or not, it really comes down to my palate, and if it tastes good and it is plant-based and natural,
you're cool with that.
I'm cool with it. I mean, I don't care. I mean, I say I don't care. I'm sure there's a lot of chicken farmers out there.
Oh yeah, it's a huge industry, and
Sure.
you're gonna see commercials running about. I mean, from the farmers. I mean, they're gonna have a campaign like for the egg here. So Vince, what do you think of this?
I don't want soybeans over easy. I mean, give me my lettuce with my bacon for breakfast. I'm good. I didn't know there was an egg shortage. I mean,
I don't think there's a shortage.
So it's just it's like, really?
Yeah.
Out of all the things, we can put a man on the moon, you're going to try to replace the egg. Somebody will buy into it. I don't know that, that whole story as far as, well, you got the grain to feed the chicken so they can have an egg, but the waste is what they use to fertilize the grain. So there's kind of a circle there.
It's a circle of eggs.
Somebody's trying to figure out a way to make money.
Yeah.
Follow the dollars.
Yeah, follow the dollars. I like that. Well, and it's one of those things. I mean, I get it. We're trying to save something, right? We're trying to keep the planet around longer. I mean, I get the whole thing.
You still got to grow the plants.
You still got to grow the plants. Right, that's the thing. I mean, now the chicken waste can go to help grow the plants, right?
Circle of life, man. And you get bacon with it.
And you get bacon with it.
That is key.
I love it. That is the key. Well, that's just some of the stuff that I see out there, and you got to talk about this stuff because it is part of life. It is part of just what's going on out there. So now when we come back, we're going to get into this because saw an article. Is the mortgage lending getting easier? Austin, we'll talk about this. Vince, I know you're well versed in the mortgage space, and you can chime in on this. We're going to jump into real estate. And Vince, I want to talk about you selling your house, your personal house, and what that looks like right now. When we come back, it's your lunch hour, Mr. Credit.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Wise Wednesday on ESPN Radio 1700.
Welcome back, your lunch hour, and thank you for joining us during your lunch hour. It's JJ in the hot seat today with Vince Scuncio and Austin Bunn in the house today on the panel, making you wiser on this Wise Wednesday. So, guys, I saw this article. This was in one of these deals, and it talks about is the mortgage lending getting easier? Because that's certainly what everybody wants people to believe, and it's you're talking about FHA. Okay, so Austin, I don't know if you heard this, but FHA did make an announcement, kind of talking about, hey, you know what, we might offer lower mortgage insurance premiums for people taking home ownership counseling courses up front. Now, I don't think anything has been set in stone yet, but it's definitely a blueprint designed to get lower cost FHA loans. And I think that's one of the biggest problems that we've seen with FHA is their coffers were running low. They needed to boost up their reserve base, and they jacked up the mortgage insurance premiums. And they took a kind of an attractive product because interest rates are good, better than conventional almost every day of the week. And they jacked up the mortgage insurance premiums, and it's just not that attractive anymore. Then you have the Congress kind of talking about, Fannie and Freddie. Well, it doesn't look like they're going to go away anytime soon. You've heard some talk about Fannie getting rolled into Freddie, kind of combining the two. And they're also talking about announced that the agencies will permit compensating factors to accommodate loans with debt-to-income ratios over 43%. Now, I want to tell you something. Since January, I think it was January 10th of this year, when the whole new regulation rolled out with debt-to-income ratios in 43%. Not everybody is limited to 43%, number one. Fannie Mae, Freddie Mac use automatic underwriting engines to kind of pre-approve their loans, and 47% or 48% debt-to-income ratio. And as long as you have a accept on their automated underwriting engine, that loan is acceptable to them to purchase. So I don't know what the heck they're talking about. I mean, I think they're throwing this stuff out to make it seem like stuff is getting rosier out there. But Austin, I mean, from your perspective, and you're in the trenches, just like I am, I mean, what are you seeing out there? I mean, you think it's getting easier?
Well, first off, to comment on the automated underwriting systems, those are absolutely not getting easier. I'm sure you're seeing it too. Fannie Mae goes in and tweaks DU every 90 days. They'll go in, they kind of have this rolling 90-day period. They look back on it, they say, oh, looks like we should tighten the debt ratio. Looks like we should call for, 10% down instead of 5% down with its overall risk factors. And so that has not been easier. I would say that we're about the same as we've been as far as processing the loan, running into difficulties. You got to have your ducks in a row when you go in to do a refinance or a purchase. But the one thing that I have seen that's loosening up is some of the jumbo players. And, that doesn't apply to everybody. But if you got a loan over 546 and you need a loan, I've noticed that their guidelines have loosened lately, which has been, I'm over in Point Loma. I see a lot of that type of stuff, and you don't have to be buying a mansion to pick up to need jumbo. That loan, need that jumbo loan. It's come into play. FHA's tightened up, but what you just said about, and I'm not familiar with the statement they came out with about FHA about potentially backing down a little bit on the premiums, but it's been all but a dagger really for the FHA program. The final one was, calling the mortgage insurance, you're set for life with this thing and you can't remove your mortgage insurance. That was, one of the big plays for that is that you can get out of it. And now, it's great. You get a 4% rate, but you add that mortgage insurance premium, you're up at 5 3/8 or something, and it's not really attractive. So it would be nice to see the conventional players getting a little more aggressive. I have seen a couple things. You've probably seen it. The fact, like on a conventional loan, you can get your down payment 100% gifted now.
Yep.
Right? That was a big play.
Yep.
That gets hotly going against FHA, and it's welcome because it used to be you could take a borrower who already has nice credit, let's say, and an FHA loan made more sense to him. But if you have a little bit dinged up credit, and as you guys probably discussed plenty of times, that with the credit, if you're going conventional, it really is harmful to your pricing.
Yeah, and what Austin's talking about is loan level pricing adjusters that come directly from Fannie Mae and Freddie Mac. So if you're talking to a mortgage consultant and they're telling you, hey, you know what, we're looking at a conventional loan and your credit score is a 630. You're seeing 4.25% all over the internet, and he's telling you you're at 4.5, 4 5/8. There's a reason for it. And you can go to Fannie Mae's website and look right on Fannie Mae's website and look at the loan level pricing adjusters. And that's where it's going to show you what the credit score does with the loan to value and how it adds the cost onto the specific interest rate. You can always pay to get the same rate that somebody with a 740 credit score is going to get. but now you're paying points. So you really need to take a look at that. And I don't think on the the conventional stuff, you're right, Austin. I mean, the automated underwriting engines, they're constantly tweaking those things. And, they're protecting their assets right now. And maybe it's all just a big ploy, to not try to buy as many loans from the banks. Who knows? But do your due diligence up front to make sure that you're getting the best option for you. So, Vince, I know that, you're a homeowner. You fixed up your house.
Still fixing it up. They're working on it today.
And you're always fixing it. I mean, it's like that's what homeownership is, right? Do. I mean, that's the beauty of homeownership. You can always fix it up, and you can keep continuing that process down the road. But you made a ploy to possibly sell it, and you're a broker, and I mean, what does that look like? So you think about selling your own house, and all of a sudden you're like, hey, I'm going to list my own house. This is what I do. Tell me about that experience.
It's a lot different when you're doing it for yourself by representing someone else, right? Because even though I have a vested interest in my client's success, I'm a neutral party. I don't have the emotion involved in getting them the top dollar. I'm strictly, well, I won't say strictly, but my job is to negotiate the best terms for the client, whether it's a purchase, sale, or whatever that is. And what you always hear from sellers is, well, look at what I've done to the house. This is why my house is worth $50,000 more than the house next door. I put in hardwood floors. And you're like, great, but they have the same view. They have everything's the same. And so, when we go on listing appointments, that's the first thing. You always hear why my house is better than everything else in the neighborhood and why my house should be worth more and whatnot. When I went in to sell my own home because my girlfriend and my daughters fell in love with the pool of all things. And I'm not a big fan of putting a pool into a house because I think you might as well just flush money down the toilet. And we live near the beach. Come on.
You got a big pool right there.
I got a big pool right there. But we decided, okay, we're going to make a run at this house. I listed it myself, put it on the market, had an open house. And you want to talk about stressing yourself out? Because I knew what the values were. I priced it below that. I wasn't unrealistic in my expectations. People come through the house. They're telling you all the things wrong with it. They don't know that you're the owner. You're biting your tongue. You're like,
now, could you bite your tongue, Vince?
Oh gosh, no. After 5 or 10 minutes of someone just badmouthing the house, and I don't have bad taste. I don't think people they didn't like the lot or they didn't like this or that, and I was like, really? You're gonna change all that anyways. You don't like the paint color? Fine.
Paint it.
But people, they come in with their opinion. They're like, well, the seller should paint everything before they put it on the market. Okay, you've bought 1 or 2 houses. I've sold 1,000. Pick one. So there's a lot of just ego bruising on that one. And we ended up not selling it and going back to working on it because I really do love the house we live in. Talk to the kids about we're not getting a pool. Yeah.
Sorry, kids.
Sorry. Love you, but go to the beach. But I don't know why, we always talk about why someone would sell the house to themselves. It's emotionally it's difficult. And man, it's you're dealing with not just the emotions of it, but especially if you're not a professional realtor. I'm working on a transaction right now where I'm representing the buyer and it's a for sale by owner. That person probably would have sold that house for about $100,000 more if they had an agent.
Yeah. Well, and that's why I wanted to bring this up because it's like if you were going to do it again, you probably would get somebody else to list your own house, so you don't have to deal with it, right? And even though it's your house, you just have someone else do it, and have someone else sitting through those open houses. But as values have crept up, there's a lot of people that are right on the edge of selling it and making it out, not bringing in money to close it, or they've been underwater, now they're over water, but they, paying out the real estate fees. But why would you do a for sale by owner? I mean, it just doesn't make sense. Number one, you're not going to get as much. We know it's proven. It's proven statistically that if you use a professional to sell your home, you're going to make more money.
Yeah.
I mean, past the fees that you're going to pay. So it doesn't make sense on that. You're not protecting yourself legally, because you're doing your own contract, and who knows if you're disclosing things correctly. So if you're out there and you're thinking about selling your own house, take it from a professional realtor that, looked at selling his own house, and you don't need to do it yourself. That's why we have the professionals come into the studio here so we connect you to the right people. If you have any questions today, you want to get in touch with Vince or Austin, just send us an email. Email@mrcredit.org. If you have any questions, maybe we can get them on air today and get those answers for you. If you want to call Vince directly, take this number down. Give it to somebody that you know who needs it. 760-729-8550. 760-729-8550. When we come back, we're going to talk about what's going on in the market today. Where's the cash? Is the cash still out there? I want to know what's going on because we are entering summer here, the hot month of the year. It's your lunch hour, Mr. Credit.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the lunch hour with Mr. Credit. And today, it's Wise Wednesday on ESPN Radio 1700.
Welcome back. It's your lunch hour, Mr. Credit. It's JJ Jon Jerotz in the hot seat. We got Vince Scuncio, San Diego SmartSale.com.
Yep.
Austin Bunn with Mission Home Mortgage in the house today. So you guys, I want to get your opinion on this. You're a buyer, a lot of buyers out there right now, we think, in the real estate market. And I see this thing across the country for the first quarter, 43% of the total home sales in the first quarter in the country were all cash, which is extraordinarily high to me, given the fact that values have gone up. I mean, we've been talking about investors kind of coming out of the marketplace and freeing up the inventory levels for the real buyers because the values have gone up. But 43%, I mean, can a normal buyer with financing get into the deal? I mean, Vince, what are you seeing out there?
We're not seeing a lot of things moving. Different zip codes. I mean, there's always one or two zip codes or more than that in San Diego County that are very hot. They're always going to be hot. Higher price ranges, the $1 million, $2 million, $3 million, $4 million, $5 million, those things sell relatively quickly for that, that market. But I'm seeing the investors kind of back out a little bit. I deal with a lot of short sales, a lot of distress sales. The banks are coming back saying, oh, well, we think it's worth, say, $500,000. Well, it's worth $500,000 if it was in pristine shape. The only person who's going to buy this home is an investor because most buyers can't see past paint and carpet. So the house will sit there. So you're not seeing a lot of those move. We were talking during the break, we're kind of in this weird, are we in a seller's market? Are we in a buyer's market? Where are we at? Buyers aren't sure, they can't really get much more financing because the loan limits are in stone pretty much. If it's a good deal, the investors are in there with cash already. And so, the buyers are left, the traditional buyers are left with kind of what's left over.
What's left. So let's talk about your market. I mean, you're really in that, Carlsbad. I mean, obviously you're all over the place.
Right.
We know that. but I mean, one of your focuses is that Carlsbad,
right,
in a very specific zip code. And it's kind of surprising. I mean, during the break we talked about, how many homes are on the market and how many homes are going into escrow?
Okay, so like 92008 and 92010, those are the areas I live in. 010, which is a little bit inland, Carlsbad, almost to Oceanside area. I'm not giving my address, but in that area, there's 35 homes for sale. Only 2 went into escrow or went pending in the last 21 days. Then things aren't moving, and normally Carlsbad's a pretty hot area. You see, people want that area, they want that school district. Now, again, it's time of year because people aren't moving. It's not summertime yet. But usually you would see something happening in May. People were buying May for June. I think, a lot of things are working against the seller is that they see last year values went up 22% in North County. So they're like, well, house was worth $600 last year. I should get $720 this year. Yeah, not the way it works. It's 22% over a year's period, not over the last from then until now. So you're seeing that. You're seeing sellers are pricing high. Things aren't really moving. People in my zip code, that's well, you guys tell me, someone's looking at a $700,000 loan. That's not. They can't go FHA
jumbo
anymore.
Yep.
It's jumbo. Mm-hmm. So they need more down payment. Someone who's buying there is probably has to sell a house to buy a house, and so their house isn't selling.
Yeah.
There's a lot to it.
So let's talk about that. I mean, you bring up an interesting point. I mean, you got to sell your house to buy a house, right? So that contingent offer, and that's what we're calling it. I mean, are you seeing contingent offers getting written? Are you seeing them?
We just accepted one today on one of my listings out in Santee.
So I mean, you're okay with somebody coming in? Hey, you got to sell your house. You're going to buy your house when that house sells.
Well, usually if you're contingent, you got to give up a little bit somewhere. We had multiple offers on this one. First people came in $50,000 below list 3 weeks into it. I'm like, really? Okay. And then the other people came in full price, but it's contingent.
Take the 50.
Now,
take the 50
you take the $50,000 and make it non-contingent, or you go with the contingency. Not a huge fan of contingencies, especially if the house is on the market, but you don't have any activity on it yet.
How long do you let those contingencies go? I mean, what's your stop on it?
It's kind of case by case.
Do you give them 45 days to get that thing in contract?
30, 40 days. It depends on how motivated or, what the needs of the seller are.
Mm-hmm.
The reason why our transaction didn't work out is because those sellers were in escrow on another property. They had to move on it, and they didn't want to wait 30 days for mine to sell. I didn't want to drop my price $100,000. So, there's more to it, but that was kind of this is why I'm not going to move forward. And we sold their house, and everyone was happy. On the one we accepted, the seller wants to live in the house for 90 more days. So
it works
a contingency works.
Yeah.
Again, it always comes down to this, and I always say this when I'm on the show. Agents, if you're writing an offer, call the other agent.
Talk about it.
I get offers all the time. 10-day all cash.
Yeah.
That's not what the seller wants. If you'd called me, I would have said, here's what the seller wants. Make it work to that, and maybe you would have had your offer accepted instead of me just or not me, but the seller rejecting it.
Yeah, it is. You make a valid point there, because I have some clients that just went in escrow. We were actually talking about this couple, family, and they were trying to go contingent, and they're running out of time. They've now sold their home, and they're looking, hey, in 2 weeks, we're not going to have a place to stay. So they are now writing offers at 14 days,
right.
To close in 14 days. And they wrote an offer at 14 days. The offer was accepted, but with a 30-day escrow, because that's not what the seller wanted. Mm-hmm. They don't want to be out in 14 days. What is the seller going to do?
That's probably not your preferred time frame either.
Yeah, 14 days on a jumbo loan. Hey, it's going into a holiday weekend, no less, right, Austin?
Yeah.
Right.
Hey, we'll get it done. So, Austin, I mean, when you have that contingent sort of buyer, I mean, if you have to sell, it's okay. I mean, we get it. It can be worked out. But what are the steps, I mean, as far as, getting pre-approved for that purchase? Are there certain things that they need to do or that you have to do when it's contingent?
Well, the first thing I ask them is, we talk about the pros and cons of going in contingent. Obviously, the pro is that you want that money for the down payment. That's why they're doing it. But potentially, maybe these people can swing it, right? They can swing 2 payments. I'm talking about qualifying. Might not feel comfortable, but they could qualify and get it done. And so I ask them, look, would you guys be up for this? I think your offer may be stronger. I mean, talk to your realtor, of course, because, as Vince said, there's opportunities out there to make this happen. But, from a blanket perspective here, what's going to get you the strongest offer if you're non-contingent? But if you are, what we need to make sure is we've got to look at, now one option I didn't mention here is you could look at doing a lower down payment loan, right? Get into that property. That's because some people need that loan. When we're talking about jumbos here, you need that down payment to qualify for that jumbo loan. You need the 20%. Maybe you could swing 10 and with a couple of investors out, a couple of lenders out there. But maybe you can do a smaller down payment loan when your house sells. We'll try to do and I know you do this too. You can do a no-cost loan on the first go-round, so you're not, kind of accruing fees and
shelling out double fees.
Yeah, exactly.
If you will. Yep.
So then, down the road, whether it's, 4 or 6 months, you can turn around and get that loan refinanced and get yourself. Now, there's always a gamble there, right, with rates, but I don't think things are going crazy. There's always volatility in the market, but I do feel that there's more chance that rates would be heading up than down, but I don't think it's going to be major over the next 6 months or so. So that might be a play that somebody could make.
Yeah, and to clarify that, I mean, so on the purchase, maybe it's not your optimum, situation as far as going in, and you're borrowing more money than you want. But what Austin's talking about is you can maybe take a little higher interest rate up front on that purchase transaction, put a lower down payment to just get into the house so you're not contingent. And with that little higher interest rate, you get rebate from the lender to help pay the closing costs on that purchase. So you're not dishing out these closing costs up front. So 4 or 6 months down the road, when you go to refinance it, now you've sold your home, you have this chunk of money. Now you decide how much money you want to put into the loan to pay it down. And now you incur your normal fees and maximize the interest rate at that point in time. Right. And the nice thing about doing that structure is that you get the chunk of money. Now you're in your new home, and you get to see what maybe there might be things that you didn't think you wanted to do, but have come up, and you want to fix it up. And now you can manage your cash, right? You want to put that pool in, Vince. You can dump the 30, 50 grand and put the pool in,
I think he made it clear he does not want to put the pool in.
Vince isn't putting the pool in.
Honey, if you're listening, I'm sorry, but
we got the ocean. We're on the West Coast. No, I mean it's all about strategy, and that's what we're here to help you do, is create the best strategy for you, whether it's selling, whether it's buying, whether it's structuring this mortgage process, because it's confusing. That's why we're here, to make your life easier. Just email us at email@mrcredit.org. Put you in touch with Vince, put you in touch with Austin, and get your questions answered. When we come back, we do have some questions from the Mr. Credit inbox that we need to get to, and we're going to talk about financing, what's going on out there. Is stuff getting better? Is it the same? Are there down payment assistance programs that might be able to help you out? It's your lunch hour, Mr. Credit.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the lunch hour with Mr. Credit. And today, it's Wise Wednesday on ESPN Radio 1700.
Welcome back. It's your lunch hour, and thank you for taking the time to join us. JJ in the hot seat. At the panel in the studio, Vince Scuncio, repeat offender on the real estate side. Thank you for being here, Vince. Austin Bunn with Mission Home Mortgage. First timer on the show. Appreciate you taking the time. So we have a little game that we like to play. It's called Should I Refi?
Home crap home.
How do you know if it's a good time to refi?
I sunk every nickel I had in the world in this house.
Don't worry, Mr. Credit has your back.
Money's out there. You pick it up, it's yours. You don't, I got no sympathy for you.
Now, here's Mr. Credit with Should I Refi?
Should I stay or should I go?
Mr. C, I have a question for you. My husband and I need to refinance our interest rate. It's currently 5.75%. Took out the loan 2005. The problem is it's a dome house. Sits on a big piece of property, and we can't seem to find a bank that wants to do our refinance for us. We keep hearing about interest rates in the low 4%. Why can't we get a loan on our house to refinance? So, and it's thank you, Mary. Mary, thank you for emailing your question in to Mr. Credit. You can always email at mrcredit.org. So this is a tough one. Austin, maybe you can shed some light on this, but I'm going to say, yeah, you should definitely refinance. It's kind of a no-brainer. The key here, Mary, is finding somebody that will lend on your dome house. Now, you can drive around San Diego County, and you certainly can find some dome homes up on the 78 freeway. There's a couple of them up there. I know, Quail Gardens Road in Encinitas, I think, and Encinitas Ranch. I think there's a dome house there. And recently I've seen a dome home, I think it was in Fallbrook, on the MLS listing. Pretty cool house for sale. But here's the problem, is that the lenders, when we do appraisals, we need to find comparable sales on like homes. And that's probably what you're running into, is that with the dome house, appraiser goes out there and they need to find comparable sales. And unless you're in an area that has a lot of dome homes that have sold recently, or dome homes around them, you're going to run into this issue. And you may not be able to find a loan. So yes, you definitely should refinance, but you got to find somebody. And that's probably why actually, in the time you did your loan in 2005, the lending arena was a little bit looser, let's just call it, than it is today. So Austin, I mean, what do you do in something like this? What's your,
I can tell you what we did with a dome home, and that was we were not able to get financing for it. And this was in, I don't know if Mary was my business partner's client, actually. But I looked at the picture and I said, holy cow. I mean, it was really unique and quite an amazing home. But like you said, it's got to kind of conform to the comps and to the comparable properties that the appraisers are pulling up. So I don't think anything's changed because that was in 2010 and things are the same, if not maybe a little tighter. So I would say one option might be to whoever she has money, if they have investments, right? Some maybe Charles Schwab, Merrill Lynch, something like that. They offer mortgages, and they'll do that for their clients, and they're not so concerned. They just want to see. I'm assuming there's equity in the property, right?
Yeah, I mean, obviously, we always need more to the story.
But with equity, I think maybe try there first. Maybe her local bank that she works with in town. They don't follow some of the same Fannie Mae and Freddie Mac guidelines as it comes to appraisals and things like that. So
yeah. Well, great advice from Austin Bunn there. And Mary, yes, we will be in touch and we'll try to lead you down the path of success. It just might be an issue. So, it leads to the same point of if you're out there looking at homes to buy. And Vince, what are you running? I mean, let's say you're working with somebody and, they find that perfect house. Mm-hmm. And it just happens to be the one that's just different. It's just odd. It's the dome home. I think, you can't get financing. I mean, you got to keep looking, right?
Right.
I mean, you move on to the next one.
Right.
Yeah. I mean, there's just nothing you can do. I think this question is going to be for you, Vince. And I know that you have done a tremendous amount of short sales. And this is right up your alley here. Mr. C, awesome show and information. I have a tough situation on my hands, but just don't know if I can do this now. I'm still underwater on my house by about $100,000 from what I know. I need to get out of this house. Are people still able to short sale and not have any legal ramification? Thank you, Anonymous. And just so you know, you can always email in. You don't have to give us your name. It's okay. We'll protect that because sometimes it's just a tough situation that you just want the answer to. So it's a really good question. I mean, we just don't talk about short sales that much anymore.
Right.
Are they still getting done? And are there still the financial sort of protection out there to protect the seller from tax implications?
They're still getting done, and the tax implications are a little, as you know, that those guidelines or those laws expired last year.
Yep.
Usually when I'm seeing short sales or seeing some kind of distress sale, the people have filed bankruptcy, so they've discharged the debt. If that isn't an option, you could be hit with that recapture, or not recapture, the forgiveness of debt. So you just got to... I always tell people, I'm like, look, I'm not a CPA, I'm not an attorney. You need to talk to someone. It's the best money you ever spend. So in a situation like that, you can do a short sale. We're still doing probably not as many as we were doing a year or two ago, but they're still happening. People, they just got to be real conscious of the tax consequences of the forgiveness and everything like that. And a lot of times in those. In the short sales, the lender will say, we're not going to 1099 you, but you want to be sure going into it.
Yeah.
I always tell people, spend the money, talk. If you don't have a CPA, let us know. We can put you in touch with some good ones. I know Mr. Credit has a good CPA as well. That is definitely a CPA question, because before you talk to the realtor, and I probably shouldn't say this as a realtor, we're not qualified to give tax or legal advice. And so, a lot of agents, they just want to take the listing, and we're going to sell your house, and then 6 months from now, when you get that tax bill,
sorry,
you're on your own.
Yeah.
Not everyone. I mean, there's a small percentage that would be that way, but I would definitely just say, you know what, talk to Mr. Credit's CPA, their tax people. We've got some good ones on the show, and get that. That's the advice you want before the other part, because then selling the house is easy.
Because there is a process. I mean, what you're saying, there is a process that you really want to take to protect yourself. I mean, there's a way to protect yourself. There's a way to do it right. You can still get done. The bank, you're telling me banks are still approving short sales. So make sure you talk to the right people. I mean, that is the biggest thing, is make sure you have the information at hand to protect yourself down the road from these ramifications. I mean, if it's a tax implication, it would be great to get out of your house, sell it short, but it's not so great if a $100,000 1099 comes your way, and all of a sudden you have a $30,000 tax bill on your hand. So you want to make sure that
which you can't discharge.
Which you can't. You cannot.
No.
Yeah, you can't discharge that. So when we talk about the process, if it is filing bankruptcy, protecting yourself, do it. You get there's a way to do these things in a certain order that is going to protect you down the road. Hey guys, it's amazing how fast the hour goes by. Austin, thank you for coming in. I hope we didn't throw you any curveballs today.
No, I appreciate you having me in.
Yeah, we'll definitely have you in again.
Thanks.
Vince, as always, buddy, good
Pleasure.
seeing you.
Thank you.
Thank you for coming in. It's your lunch hour coming up. The Big Daddy Radio Show, 1700 ESPN.
If you would like to contact Mr. Credit or access any free offers mentioned on the show, just go to MrCredit.org. That's MrCredit.org.